Hi, welcome to this video, which is all about best Forex brokers. Now, in terms of today, I'm just going to go through 4 brokers, which I think are worthy of consideration. If you're looking for a broker, I would like to point out that I have no affiliate deals with these brokers. They're just ones that I consider really good. Now, they will all offer low, tight pip spreads, and in terms of a lot of traders, they will just make that the overriding criteria for choosing a broker. I think a broker has got to meet other criteria as well, which I'll go through now. Also, in terms of low pip spreads, we pay such low transaction costs today. I also just want to go through some research that has been done on how much difference it's made to retail clients making money. And over the last 20 years, dealing costs have dropped dramatically. Now, in terms of the best brokers, the criteria I think you need to consider when choosing one, and also the research on the decline in transaction costs. I've written up some points on a storyboard, and what we will now do is go through all the points in more detail. So let's go and take a look at them. All right, let's have a look at 4 Forex brokers, which I think are well worth considering. There's others you can look at. I'll give you the criteria that I use to choose out brokers. You can find others if you wish, but 4 above are good, solid choices. Now, in terms of the first one, Awanda, if you're in the US, you don't really have much choice in terms of brokers you can deal with. Awanda is the best. I really like their way of doing unit size. You can trade any size that you wish. I just really like the broker. They've got a wide variety of pairs as well, which is one of my criteria for choosing a broker. Okay. IC Markets, Pepperstone, originating out of Australia, really good, solid brokers, also regulated in Europe, and Saxo Bank. All these brokers have got a wide variety of pairs. Saxo Bank probably the widest variety of all. Now, criteria for choosing the above. Yes, they do have really low spreads, perhaps not the lowest, but they're low enough, and they've got basically a wide variety of pairs. They've got really low pip spreads in the lesser looked at crosses and minors. Okay, and I think that's important. I think if you're a Forex trader, you want as many pairs as possible, because very often the best opportunities are in the lesser looked at pairs. So you do tend to find spreads vary a lot between brokers in the more minor, lesser looked at crosses. All 4 brokers have got really good pip spreads in those pairs, as well as in the majors. Okay. Regulation, all those brokers are regulated in multiple jurisdictions with what is very stringent regulation. Obviously the US, very good regulation. UK, Australia, most of Europe, with one exception, which I'll come to in a moment. Also, I like brokers that are established for a good while. They're really financially stable and they're profitable. That means they're doing something right, doesn't it? Now, in terms of broker platforms, which is the best, they're mostly all pretty good, actually. I never found a broker platform that's really way above any other. They all do the job for me. So I don't really consider that such a big issue. Broker platform's pretty good for me. In terms of regulation to avoid, Cyprus. Do not deal with a Cyprus broker. I'm surprised the EU has not clamped down on CySec. The regulation is so lax, brokers withholding money from clients, cheating them. The regulator doesn't do anything. I'm just amazed at the regulation there, and it's not come under EU scrutiny. Never deal with a Cyprus broker. Also, there's a lot of brokers that offer no pip spreads or no dealing costs, really low spreads. They say they're regulated and they're not. What I mean by that is they'll say something along the lines, we conform to the financial regulations or business regulations of the country. And all beginners think they're regulated. No, that just means they're adhering to local laws. You want a specific regulator there and look up the regulator and see what they actually do. Okay. Um, a lot of brokers are a little bit cheeky in terms of when they're in jurisdictions that aren't regulated, implying that they are. And you find a lot of brokers like on tropical islands doing this, like Mauritius or somewhere like that. Avoid them. Okay. You deal with an unregulated broker in these restrictions or jurisdictions that are not regulated. They can cheat you. Okay. They can steal your money. You really shouldn't do it. Okay. Stick to regulated brokers. Now, in terms, a lot of debate amongst retail clients. You see a lot of people online discussing which is best, market makers or ECN. It's not an issue. Retail traders don't get true ECN. You're dealing with a market making scenario. If you're a retail trader, just think about how low the spreads are. How can a ECN broker make money off those spreads? They can't, can they? They do backdoor deals with the market makers they're in league with, who they lay the trades off to take a percentage of the client losses. And a lot of retail traders get all excited about the broker betting against them. That's why you're getting really low spreads, okay? And it's up to you to beat the odds. They don't cheat you, market makers or ECM brokers, if they're regulated. They don't need to. They know the market, just basically will take retail traders' monies. Retail traders will always make the same mistakes. And think about this statistic: 90% of retail traders, lose 90% of their money in 90 days. That statistic is well known. So good business, isn't it? $1 million in to a broker, 900,000 gets lost. Okay, ends up in the broker income stream. You think about the way brokers operate. They don't need to help clients lose money at all. Okay, they're going to do that on their own. Basically, the way brokers work, they're like casinos. Few people win or have a big payout. They don't care. They know the majority are going to lose. Just like casinos have big payouts, but they know the majority of people through the door going to lose money. Now, in terms of spreads and dealing costs, they have come down dramatically over the last 20 years. The cost of doing business in Forex now is minuscule. Okay, cheapest ever. Has that made any difference to the profitability of retail clients? None whatsoever. In fact, I think in terms of the low cost of doing business in the Forex markets, particularly for beginners, it helps them lose. Why do I say that? Because if you've got low spreads and you cover them quickly, you quickly come into profit. There's temptation to think, well, I'll snatch small regular profits, and you focus on getting percentage of winners. So you see a lot online, traders saying, well, strategies can work that snatch 20, 30, 50 pips per trade. No, it's too short term. Your profits are never going to cover your losses. You've got to be aiming for 100 pips or more as a retail trader, okay, to cover your losses. Now, come now to frequency bias, which is important in terms of traders just think they can sit at a screen, trade off the minute chart, 10-minute chart, 50-minute chart, make money. Scalp and day trade, they're going to lose. All scalpers and day traders lose. And what they don't see is the noise levels in the chart. Okay, I'll come to the noise levels in a moment. But if you're wanting to be a scalper or a day trader, don't bother. The only scalpers and day traders who make money are the big banks and hedge funds with high frequency trading programs that are lightning quick, and they're designed to create noise and basically take retail traders money. Noise levels are very high, okay? So if you're snatching small profits, you're never going to cover your losses, okay? Just end up losing your money. 100 pips is the minimum you should aim for, in my view, as a retail trader. I just did a simple test, just using straight line appreciation, depreciation, picking out obvious trends on a chart that lasted for a few months, and then working out the noise factor in terms of the daily volatility against the trend. Okay, it was plus 30 on all the tests that we did. Now, you can look up what straight line appreciation, depreciation, noise levels means, but just in pure simple terms, if you're looking for anything under 50 pips on a consistent basis, you've got no chance of making money. I think, yeah, low dealing fees are great. We want a low cost of doing business. But in recent years, there has been a big focus in terms of retail traders on trading really short term, going for too small profits. They're fooled by covering the cost of business quickly, and they can't see that they can't cover their losers with their winners. I've done various videos on this. You can go and look them up if you wish. So in terms of the 4 brokers I picked out, really good spreads across a wide variety of contracts, and really good solid companies. We go and take a look at them, and obviously there's other brokers around that are good. I just have personal experience of the above, but just make sure you use the criteria I put down to find yourself a good solid broker. I'm trying to think of anything else I need to add in this video. I think I've covered everything I need to. So that is the video for today. Thank you very much for watching me as usual. Take care and have a good day.